Hey, welcome back to the channel, Fully Invested Phi Labs. Happy New Year, everybody. Hope everyone had a good New Year celebrating. Over here in Seattle, we had a very foggy New Year's. Like, we were watching the fireworks at the Space Needle, and it was basically just fogged out and just couldn't see anything from the fireworks. It was kind of funny. But yeah, today I have a meaty video for you today. I'll be going over the portfolio updates from the last couple of weeks that I missed, given the holidays. So basically the full month of December. And so I'll go over the dividends, performance, goals, all the usual stuff from like the weekly and monthly videos. And so yeah, this is month 7 or week 32, and I'll cover weeks 31 and 32 essentially, since I started investing 100% of my paycheck at the end of May 2025. And also the meat of the video will actually be going over this year's numbers. Like, so where I started at the beginning of the year, where I was when I started investing my full paycheck in May 2025, and where I ended up by the end of the year. So I'll be breaking down my full numbers, my dividends received, how much I invested, all that good stuff. And yeah, and I'll cap it off with like kind of learnings that I've had so far from doing this strategy for 7 months, and kind of like things I'll be keeping in mind going forward. As usual, before we get started, just a little disclaimer, this video is for entertainment and educational purposes only. I'm not a financial advisor. Nothing here should be taken as financial advice, investment, or tax advice. I'm simply sharing my personal investing journey and documenting my own results very, very transparently, as I always do. Investing always carries risk, especially when using margin, and you can lose money or principal. So don't copy when I'm investing blindly without understanding the risks and also researching things on your own and doing your own due diligence. No returns are guaranteed. So yeah, so as a refresher for anyone that's new to the channel, yeah, here's my fully invested flowchart. So I invest 100% of my income, 10.8K every month, into growth and high yield ETFs. I stopped using traditional banking to live entirely out of my brokerage account. So I'm using cheap margin to bridge the gap between my bills and my dividends. And the goal is to never sell a share, forever compound, and have my monthly dividends eventually exceed my monthly expenses. So if you want an in-depth breakdown of this, I have a video at the top right here that you can check out. And yeah, let's just get started. So first things first, let's just pop over to the sheet. You'll notice some changes in the sheet here. I'm kind of prepping to kind of put out my sheet here publicly for people. So it's already kind of gone out to patrons to start getting some feedback, and then I'll be kind of sending it over to people in Discord to get feedback, and then eventually I'll get it out publicly for everyone to use if they want, or study, or pick apart what they need for their own sheets. So yeah, that's how I built this one. I built it off some other free sheets that I had gotten from past YouTubers. As far as the top line numbers, let's have a look here. So yeah, now my gross value of my portfolio after December is sitting just under $300,000. So it's sitting at $298,659. I'm using with that $145,920 of margin, which nets me at a net value of $152,739. So yeah, you can kind of see how everything kind of lines up together and ends up to that final number. This is what you typically see in Robinhood, right? And then yeah, I'll just, for now, I'm not going to keep reading off all these numbers, just a lot to go through. So I'm just going to read off basically the total profit and kind of like both the total return of that with realized gains, and then also like the unrealized gains combined with the realized gains. So if I go off the total return for the portfolio combined with the realized gains, I'm sitting at a gain of $46,756 or 30.61%. And yeah, given the dip that happened in November that I haven't kind of quite recovered from yet, yeah, just the dangers of margin again here, right? Because I was levered, got hit particularly hard in November and December as stuff dipped. Even as stuff recovered a bit, it just hasn't quite recovered enough to kind of make up the big dip that happened. So if I go off the unrealized gains combined with the realized gains, I'm down $15,648 or 10.25%. So this is all going off the net value here. So the 152,000, right? So I keep all these previous values just as just reference, just so I can know where I'm at. But this is the main one I'm kind of keeping an eye on. Like, had I not sold my Apple and Microsoft, just to kind of know where I was at before that happened, right? So yeah, that's where I'm at. If we kind of look at a glance at all the positions here, so if we look at the total return column, things are mostly in the green. Costco here is still kind of struggling to keep up, and it has just kind of been kept low. So like, I didn't invest in it last week, but did Hood instead. But I might maybe do it in future ones, given that it's kind of depressed, and I just love Costco as a business, as going there myself too. So yeah, I'm gonna keep an eye on that as a potential low point to invest in. Prepay still kind of trying to catch up, making some good headway, but still lagging at 11.95% or $2,900. Ulti is the same. I started reinvesting into this now that the margin maintenance has kind of ironed out. And also I'm just kind of curious to see how the new strategy plays out, honestly. Seems like it's taking a hit for the dividend, so it's kind of sitting more at like 70-75% range. I wouldn't mind if they even went a little bit lower if it means the NAV gets a little bit more stabler, but seeing how the NAV's been performing since the strategy change has been optimistic, so we'll see how it goes. It could also backfire, but kind of willing to see there, just because like between Ulti, YMAX, and WPay, these are kind of like my ultra yielders. Like I want to have a portion of my portfolio in the ultra yielders to kind of push up my monthly expenses, and having like a diversity of ways of generating that income between all three of these, right? And yeah, so TDAC is slightly in the red. I pushed a bunch into this the other day with my Paycheck investing, and then there was just like literally later that day there was like a dip in the NASDAQ with things, so this kind of got into the red thanks to that. It was previously in the green. QQQI staying in the green, and then Misty, of course, is just the big laggard in the portfolio. Yeah, so just keeping an eye on that one. Still debating whether to kind of get rid of Misty, NVIDIA, Hui, just all the single stocks essentially, and just kind of stick to the fund of funds. The only one that I'd keep is GOW for just because that's kind of my basically my YouTube earnings tracker stock essentially. So yeah, that's how it's looking for those numbers. If we pop over to how it's split between growth and high yield income. So right now I'm sitting at $163,515 that's invested into growth. So that's really just like all these stocks, right? Between my single stocks and my ETFs that are anchoring the portfolio. And then the high yield income, everything here, right? So yeah, that's sitting at $135,143. So to total that $298,659. So yeah, it's a good allocation. Like it's just under 55% for growth and 45% for high yield income. So considering that like that high yield income, the $135,000 is generating $5,100 a month is pretty good. Like when you consider that spread, right? Because I'm paying essentially 4.5% interest or $543 monthly to generate 10 times that, which is pretty cool. So yeah, that's kind of yielding roughly a 45% yield on top of the money I have invested in those high yield assets. So pretty good. And this new section here for margin held, I kind of touched on this the other day, but kind of just clean this up just to kind of show like a clear correlation as you kind of go down the chart, right? So you have my gross portfolio value here, you have my margin being used, you have the net value, and we apply this like 25% blended margin maintenance. This is basically blending all the margin maintenance from all the positions here, right? Whether they're like 25%, 30 or 35, I kind of get the blend of that based on the allocation. And that gets applied to basically the gross and market value of the portfolio, this number here. And that's how you get this one, this bottom number, which is what the portfolio would need to drop at for a margin call to be triggered, right? So there's basically a buffer of this much between my net portfolio value and this ultimate value here. That's basically my 25.5% blended margin maintenance ratio. So yeah, overall pretty healthy. My margin buffer there is, if I go off the gross portfolio, the $298,000 value, it's actually 25.64%. So this value would have to drop, this portfolio would have to drop 25.64% to trigger that. So that would be the equivalent of a 50% drop on the net value of the portfolio. So yeah, I kind of really keep in, like Robinhood shows this number. I kind of like keeping in mind this number because ultimately this is what's invested in the market. And so if that drops 25%, then that's the equivalent of this given the leverage, right? So yeah, with that, I'm kind of steadily growing my buying power every month, even as I'm drawing money from the account, right? So right now I have like $65,707 of buying power. Half of that is available for withdrawal, basically. So $32,853 is available for withdrawal. That's like cash I can take out of the account if I wanted to. I could basically margin up to this full total here. So this number is basically the difference between this number and this number, right? And then this is basically half of that. So that's how it's looking. So my available for withdrawal ratio is looking at like 21.51% based on the net account value. So healthy overall. Ideally, I want this to be over 20% generally, you know? So yeah, margin wise, and equities at 51.14%. So above 50%. Always want to keep this above 50%. So in any cases where it might dip under 50, that's where like that might trigger me, like maybe not investing my full paycheck 1 week and maybe just depositing it to margin to kind of get this back up, right? So always keeping an eye on this. But so far it hasn't dipped under 50, even as I've been doing it for the last 7 months, and even through kind of like the couple of dips that we've had, especially in November and December. So that's how it's looking. And I mentioned the monthly dividend there. And yeah, let's just hop over to Robinhood to kind of just look how that looks on the chart, right? So over this past week, it's been a bit red, hasn't done the best, down 1.38% or $2,100 over the month. same, just not so good in December. It's kind of went down a bit, down 2.31% or $3,600. The 3 months, this is of course the dip that I was mentioning from since like October and November. I haven't quite recovered from this dip right here. Kind of gone back up, but yeah, has struggled to kind of hit those same highs from the end of October. And yeah, year to date, because we're in January now, but starting green, which is good. But yeah, over the year, this is how it's looking. So just positives. This is since July. I don't have the history from that. This is when I transferred into Robinhood, but 5.18% or $7,500. These are kind of like, these are matching the numbers you saw from the sheet earlier. So yeah, let's pop over to Snowball to kind of look at stuff a little bit more in depth as far as the performance, right? So kind of these are roughly matching. There's actually some stuff that are missing in Snowball that I'll have to add, like some old like CRF numbers, stuff like that, but kind of roughly matching what you saw there, but showing the IIR based on like the last few years that have had this. So averaging like 8.16% a year is what it's kind of estimating. And you can kind of see the new categories here that I mentioned last time. So I've kind of split my high yield ETFs a little bit further just to isolate the ultra high yields into their own thing and kind of show how much this is actually eroding, just because of the high yields that it's really paying out. But my anchors and single stocks are holding up good. Those are still in the green. Yeah, my anchors on the ETF side for my growth side are doing good, and single stocks are doing great. And then my little hedge in gold here. So we pop over to the growth side of things just to compare it to the S&P, at least since the last little bit. So this leaks a little bit into January, but yeah, just kind of seeing here, it's trailing the S&P here by $800 or 0.53%. It's a month trailing it again, right? Over the 3 months, trailing it, 6 months. We can't do year to date anymore. So yeah, if I go over the year, just barely matched it. Just trailing it by 0.69% or $1,000 here. So yeah, overall not bad considering like matched the S&P, but also got all this income that came in this year. So, and we'll actually dive into those specific numbers. So yeah, honestly, not bad. I'm glad even with all that income, it kind of matched the market. All that factored in, so not so bad, all things considered. Yeah, even in my projections, I'm kind of going for even more conservative than that, where like I'm saying 7% if it grows, right? Given my mix of growth and high yield stuff. So if I match the S&P that year, it's pretty good. And as far as dividends, so let's pop over there. So if we go to the calendar here and kind of see what happened in December. So the last update here was on the 20th. So we'll just kind of look over all these here. So a lot of dividends that came in towards the end of the year. GOW, Meta's quarterly dividend, VU's quarterly dividend, you pay all my monthly stuff, BTC Gold, QQM's quarterly dividend came in, SPMO. It's a nice big one for SPMO since I put a sizable position in that, Ulti and YMAX. And I'll just kind of read off like actually the percentages aren't even showing in here anymore. So yeah, overall, you're kind of seeing the dividends here. Like normally, had I done this video early enough, I would have been able to kind of get the yields like I have here. But once you pass a certain time, you kind of miss out on that. So that's okay. Yeah, but overall, this is the amount that I got in December, $5,859.79. So yeah, quite a bit. Or actually, let me double check in Monarch here. I feel like that's a little bit inflated. No, actually $5,633.11. So yeah, the Snowball miscalculated there a bit. But yeah, that's how December looked. So pretty good month overall. Definitely in like the higher end of things compared to some other ones. Not the highest. The highest definitely still October. But like yeah, if we check the overall chart there, kind of see how it's trended up, or actually you could probably just check it here in Monarch because this is the actual money that came in. So you can kind of see how that chart grew over the last year with my dividends here, right? And yeah, and then one thing we want to check in the sheet as well is how I've done basically since I started investing 100% of my paycheck, which happened at the end of May, right? Over here is when I transferred everything over to Robinhood, just to color code that. But yeah, how it's looking, you can kind of really see how it's done from like where I started in May to now. Yeah, so in December, I had a market value of $297,000, $437, equity of $151K, margin equity at the time was 50.83%. So this was from like on the 31st. So that's why it's slightly different from what I mentioned earlier. My available for withdrawal, pretty similar, 32.4K, 64.8K of margin buying power. So you can kind of see how this has steadily been growing over the last 3 months as I kind of stuck to like the $9,000 budget that I had. So you can kind of see, which is nice. So I'm like fully investing my paycheck and I'm withdrawing from it to pay bills but you can kind of see that my available for withdrawal and my margin buying power is growing. If I manage to kind of be more disciplined by my budget next year, like this could actually even grow even more. Like if I get stuff down to like 7,000-8,000 per month. On average, I tend to do 9,000 is what it's looking like though. So yeah, my margin buffer would be 25.34. You can kind of see the progression here, or 49.84% if I go off the net value, and you kind of see the margin buffer there slightly growing, and margin kind of ticked up here. So it's kind of on average going up $4,000 a month, like I'm saying, just because like $9,000 is coming out for bills, $5,000 roughly is coming in from dividends. So really the difference is that 4,000 once those dividends deposit, because those pay down the margin essentially. So yeah, that's $5,633 that came in that month. So you can kind of see like the progression here of like how the income has gone over the last few months. So yeah, so progressing pretty good. It's pretty good to see just how much the market value in particular is growing. Equity, obviously not as much because I'm drawing from the account, right? But this is the key part. The market value will just keep growing, keep compounding. Yeah, just because I'm not ever selling any positions to withdraw money. I'm just borrowing it on margin essentially. And then, so last thing for the month's performance before we dive into the year-end stuff is to just take a look at the projections here and where we're sitting, right? So let's take a look here. So this is the raw projection, right? Just like what I had started when I built this in August, just to kind of see how it is. So just kind of take a look here. So at least based on this, we're trending a little behind, just with like the dips that happened over the month, and also yeah, just income wise, this is trending like way lower. So yeah, you can kind of see where it's useful to have projections to actually see where you're kind of lagging behind and where you might have to tweak your projections a bit, which I'll probably have to do for this new year here, just because like maybe I'm not adding as much here, given that I'm going to rebalance things a little bit as far as like not investing as much into the ultra yielder. Still some, but not as much. But yeah, that's where it's looking. So you can update the goals here as well while I'm here. So this stays the same. If this goes well, potentially in February, I might have my monthly dividends covering my extra net paycheck, monthly expenses covered. So this actually moves down a bit from February 2027 to May 2027. Net monthly salary covered. So that would be 14.8K roughly. Or sorry, no, net would be 10.8K. So right here. So it'll go from August 1st, 2027 to December 2027. My gross monthly salary covered. So that would be 15.6 roughly. So just call it here. So that's kind of getting delayed to August 1st, 2029. And when my margin being paid off is looking more like, yeah, just past the 40-year-old mark here on 2031. So things are getting a little bit delayed here, given the dip over the last month, and it's kind of good to see how that stuff changes month to month, really. And then 2x my gross monthly salary before I'd kind of consider kind of doing early retirement on these. So this is looking more like, so it had to be double this essentially, so 31K or so. Let me see here. Yeah, 30.6. So more like here, 2034. So just before 45 years old. So things are getting quite a bit delayed. So yeah, there's kind of, I'll talk about some things that I'm maybe considering kind of help this along. But yeah, that's where the projections are looking like, right? So kind of pushing past a couple of years after my 40-year-old target. But even then, like if we look to the 40-year-old target, like I'd have potentially by then just over $1 million in market value, and then in net equity would be $1,036,000, and then still have some margin here because like at a certain point my monthly dividends exceed my monthly expenses, then that extra can kind of go towards paying down margin. But again, like I've mentioned, like maybe once I reach the 75% mark or 80% mark, I might actually just kind of keep that margin on and not pay it down, and then just have that extra funnel towards the portfolio to kind of help get these numbers better and push up these dates better, right? So, but yeah, those are the goals and how they've kind of shifted from kind of like the last 2 months of dips essentially. So yeah, I'm gonna keep tracking these and kind of seeing how we do with these in the new year. And yeah, that's basically the numbers for the month though of December. So yeah, definitely like a tough last 2 months with the dips. Haven't quite recovered from the November one, so we'll have to keep an eye on that. Yeah, because definitely the leverage is kind of dragging things down, right? But yeah, that's the dangers of it. But so far, my equity's still holding up, which is good. My income's still holding up. Maybe not growing as fast as I'd like, given given everything, but that's where we're at. So being fully transparent about all that stuff. And yeah, so now for the last part of the video, yeah, let's go over where we ended the year. Let's hop over to Miro over here. So I made a little section here that we'll go over. So basically kind of I went through my old statements and got my numbers that I had at the beginning of the year last year. Just go over them. So at the beginning of the year, January 1st, 2025, I started with a gross portfolio value of $159,503. I was already carrying a margin balance here of $61,296. And this was a mix, honestly. This was a mix of like some high yield stuff that I was starting to dabble in and margin, and also just kind of some bad stuff of like, I was just kind of consolidating some debt and with the margin there. So, but gradually this full margin balance kind of mostly became like generating actual yield from it, essentially, with the high yield stuff. But yeah, my net portfolio value was sitting at $98,207. And yeah, and so in the previous year too, just to kind of really illustrate the difference here once we get to the bottom, is that I contributed $42,938 in the portfolio. So that was kind of roughly when I was doing anywhere between $3,000 and $5,000 a month of investments for my paycheck. And my dividends at the time, I was starting to dabble in the high yield stuff, so my dividends were a little bit higher as well, $6,929. And yeah, and the margin interest that I got from carrying that balance was $5,765, right? So just barely of a spread between these two, which wasn't great, right? But my goal when I was kind of dabbling with margin at the time was just to kind of keep afloat, to cover my margin with dividends. So I got that goal accomplished, but obviously this year I wanted to kind of push past that spread a lot more, right? So that's where I started the year. So just under six figures in the net portfolio value, and yeah, kind of see how we progressed, right? So in May, I made the shift to investing 100% of my paycheck, right? So that brought me to a $205,847 gross portfolio value, and my margin balance ticked up here to $88,000 because I was kind of starting to mess with like the living out of the portfolio over the last months before that, but fully I made the transition in May, right? And my net portfolio value at the time was $117,847. So this is where, with the numbers, where I started feeling comfortable, and after I was running all the projections and the numbers to actually live out of the portfolio, right? And I made the big transition at the end of May here. And then so where we ended the year between all that is in December. So those same numbers I mentioned, essentially, right? Yeah, just kind of mentioning all those margin balances here. Like, yeah, the ones I mentioned earlier that was before some dividends dropped, so that's why the difference there. But yeah, $297,437 for the gross portfolio value, 146.2K of margin balance, and 151.2K of net portfolio value. So the big difference here is that, like, you can kind of really illustrate from here to here, right? Just seeing how much of a contribution difference it is. So in total in the portfolio, I've contributed $151,779 this year. This is just from starting in the halfway point of the year. So next year, I expect this to be even bigger, even crazier. Dividends received, I've received $51,237 of dividends this year. And for this margin balance I was carrying, and I actually have less of a margin interest this year because the rates have been dropping. And then also I did make the big switch to Robinhood, which considerably cut down my margin, because like over here I was paying like 10-11% of interest here, and then here now I'm paying like 4.5%, and it keeps going down. So really, like, I'm paying $4,708 of interest this year to carry this margin balance, but with that money I'm basically making $51,237, which is amazing 46.5K spread, right? So this is what we're talking about as far as like the arbitrage and having a spread between like what your money's yielding and what interest you're paying for living on margin, right? So you can kind of really see how much of a difference that is. You can kind of really see just how stuff has gone from between the beginning of the year and the end of the year. If we pop over to like these snowball charts here, the accuracy of these aren't great because like I made a switch mid-year between Fidelity and Robinhood, right? So all the numbers aren't quite fully there. So next year, hopefully this will be a lot better, just because like even here, so I just underperformed the S&P. If you look at that over this time frame, but there's some weirdness there too, because like when I look at the realized P&L, it's kind of missing some gains there that I realized, so that are not being accounted for. They're only like quarter of them being accounted for, which is weird. But yeah, overall though, yeah, glad to have like roughly matched it. There's some part of the year I was underperforming, some where I was overperforming, and then really that dip in November really just kind of took these down and kind of just got close to even there. So Yeah, and then again, these numbers that we went over earlier. So yeah, that's how it's looking for the year. So you can kind of really see the before and after really make over the portfolio. And then this is really where everything changed, and we'll see how this kind of goes. And it'll be nice to do a retrospective from May 2025 to 2026 in a little bit. But yeah, that's where it is. And then one thing that was nice in Snowball that I was messing around with earlier is if I go back to this section here, right? So this is what I was talking about as far as like just some missing realized P&L here, because I should have like closer to 9,000 or 16,000 of realized P&L here, the Microsoft and Apple sale, but for some reason it's only getting a portion of that. I'm not sure why. But yeah, some neat stuff that I was messing with earlier is that you can actually kind of check per category to kind of see how you're doing. So I can actually kind of just go singly over here, so you can kind of see how my single stocks performed. So they actually between all my single stocks, I actually still underperformed the S&P here. The S&P would have done 24%, like if I had invested that same money into it. So this was interesting to see. If we pop over to my anchor stocks, this quite a bit underperform, and this is just because I have a good chunk that's in SEHD, which is dragging things down, right? So yeah, that there makes sense. And then, but that helps cushion things a bit better with the drops, right? And then if we check my anchors for the high yield ETFs, this one was actually kind of cool to see. The anchors actually held up pretty well and actually outperformed the S&P, which was nice to see. So this is what XPay is, TDAC, QQQI. So this was kind of cool to see. And then high yield single stocks, those underperformed obviously, but still stayed positive, which was nice to see. This is like given with dividends received as well too, right? And then ultra high yielders, yeah, these are obviously you can kind of really see that the NAV erosion at play, and especially as they got hit hard during this November dip, right? So this is like WPay, Ulti, YMAX, and then you can kind of see all of them combined. So like if we say like put the growth single stocks and the growth anchors, kind of see how it compares to the S&P here, and then even like the high yield stuff. Just kind of cool to play with this. If anyone else is in Snowball, you can kind of really break down the performance of stuff. And here, all the high yield stuff combined together actually stayed positive, which is good. So stayed even with all that I invested in it, given the dividends received. So really cool to see that stuff. There's even like a heat map that is pretty neat too, that I was looking at too. So like if I refresh this, yeah, just cool to kind of see the heat map here of like what performed over the last. So let's just do a year, right? You can really see. So SHD was up 5.4%. With these all with dividends reinvested. XPay held up pretty nicely and actually did better than VU for me. QQM did 20%, which is good, and Nvidia did good as well. Actually matched QQQM here. SPMO was a fresh thing, so there wasn't much ways for that to go up. But yeah, you can kind of see how WPay eroded, YMAX eroded, Ulti eroded. You can kind of see that Apple and Microsoft just barely beat VU, which isn't great. Like when I see this stuff, honestly, I'm like, I might as well just kind of almost take this money and put it in QQQM and I'll get a better return, right? But yeah, that's why I'm keeping an eye on single stock stuff. Some days I just want to do ETFs, right? And MISTI obviously did terrible this year, down 28% because MSTR performed really badly. Bitcoin is down a lot as well too with BTCI. Google up big a lot, but that's a smaller position for me. Reddit up a lot. GOW did decent because of Google. But yeah, just really cool stuff to look around and poke around in Snowball. Yeah, I was really just kind of digging into this whole growth page. It's fun to play with and check how your stuff is doing and maybe kind of think about your moves in the future, right? But yeah, I guess like between all this, right, I guess some of the learnings that I got from that and checking through Snowball and stuff like that, and checking like the ultra yielders and checking how all that has performed, right? Like definitely, like I think I was over indexing on the ultra high yield ETFs this year, especially the last few months. So especially with the dip that happened in November, I kind of really saw how the dips and the downturns can kind of affect the income, right? So I feel like, yeah, the income was kind of steadily growing, but I feel like it kind of stagnated, especially like, yeah, with November and December kind of going down, right? So yeah, that was interesting to see. So I started at 4.6K and then, yeah, 5.6K. So definitely went up overall if we average that out, but yeah, definitely not as high as my projections were showing. So I'll have to adjust my projections going forward. But yeah, I think like I was maybe a bit too over indexed on that. And like, cause like as those drop, right? Like say if Ulti is yielding like 75%, at a certain price. They'll try to kind of mostly keep that, but if it goes down, it's still going to yield 75%, but at the lower price. So effectively, so your payment goes down. So yeah, definitely something I want to keep an eye on, and I want to balance out a bit better. So like you kind of saw in my last Paycheck investing series, I basically balanced it out where I was putting a lot more into like a more stable yielding like TDAC or like QQI or something like that, something lower yielding in the 12 to 20% range. And then I'll balance that out by still having a little bit of the ultra yielder, but a smaller pinch of it, let's say. So like, for example, on that last one, I did like 2.9K in TDAC and 1K in Ulti, right? So kind of want to go through that ratio a little bit just so I can kind of build a more solid base and kind of make sure that this is steadily growing instead of kind of being affected by those big dips, right? So yeah, and then also like I mentioned too, like as I was kind of going through the heat map here, I think this really kind of drives it home is that like, yeah, I was trying to rebuild my stomach for kind of single stocks a bit this year. But I don't know, I still, especially given that I'm kind of switched the strategy to kind of using all this margin and living out of the portfolio, like I think my stomach is maybe a bit weaker than I want for that. So yeah, some days, honestly, I just want to sell out of all my single stocks, just do ETFs and like worry about it less risk, less single stock risk. So I'm going to hold on to it for a bit, but still mulling that over, honestly. Yeah, if anything, like if I do it and like say for even just like my on the growth side of stuff, like I'd probably just sell anything that's in the green and maybe still keep Costco until that kind of gets back into the green and then just kind of put all those into the ETFs, right? But we'll see. Still mulling that over. Like my whole point of that was to start rebuild my stomach for that, just to kind of make it through any kind of dips like that and keep investing. But we'll see. But yeah, other than that though, one thing I'm kind of keeping in mind in my back pocket and thinking about for the future is if taxes come in higher than expected and tax season in the next couple months. Yeah, so we'll see how that goes. I think like I said in that video I did a couple months ago, I'm not too worried about it yet. I think like a lot of my deductions and mortgage stuff will offset a lot of stuff, and I might have a little bit of a refund or maybe just owe a couple of thousand, which wouldn't be bad considering if I brought in this much income, right? If I just owe a couple thousand and I brought in that much income, that'd be pretty dope, but we'll see. And that may not be the case. But yeah, if that's not the case, what might happen is that maybe I start setting aside money from dividends for taxes just for next year. Or if it's really, really bad, like if I owe like, I don't know, upwards of like 10, 20K or something like that, then maybe I might consider a strategy change there. Like maybe I just go for something a bit more tax efficient, like maybe just go for pure growth and margin, something similar to like Recycle Your Money does. It's really cool to see how he's making that work, and kind of like even other people, how they make a similar system work as far as like investing their full paycheck in that into pure growth stuff, and then using their paycheck to pay down margin on like when stuff is green or at all-time highs, and then only really dipping into margin when stuff is dipping. So yeah, we'll see. Keeping that in mind and keeping that in the back pocket, just to be fully transparent. And yeah, and given those projections that I did a couple weeks ago too, or a couple months ago, I'm also considering maybe doing a test of like a month or two long test where instead of depositing my dividends to cash and margin, pay down margin balance, maybe my dividends either go towards actually going to growth to just kind of push up the portfolio that way, or potentially maybe even just push into that more high yield ETFs and probably more of the safer yielding ones like TDAC, QQI, just to kind of keep juicing the income and keeping that stable too. So see, I might maybe do that as January and have like a couple weeks to decide before the paycheck comes in. But yeah, I'm thinking about that in the back of my mind. That might be a test I do, because yeah, doing those projections really open things up. Like maybe I might need to do a projection of just like what it would be like if I invested more of the dividends into high yield stuff, because I only did it for the growth stuff, but that was already promising. So we'll see. We'll keep that in mind.
Hey, just wanted to pop in and just do a quick correction here that I realized as I was editing the video, but the margin interest that I had for all of 2025 is actually $8,774.92. I totally forgot that I hadn't added my margin interest from Fidelity in my Monarch and had gone off my Monarch number. So yeah, that's the real margin interest there. So slightly higher than the previous year. Yeah, given that I was paying like 10-11% for a good half of the year before I switched to, or more than half the year before I switched to Robinhood, and it's cheaper margin rates. But still, even between that's still a great spread at $42,462.90. So yeah, just wanted to make that correction because I just noticed that mid-edit.
This has gone way longer than I thought there was a lot to cover. So yeah, this week we'll skip the finance video of the week. None done this week. And anyways, with the holiday break, I haven't really been watching as many videos, honestly. I've just been really relaxing and just doing other stuff, like still doing videos and whatnot. But yeah, not watching as much as I normally do during a normal work week. So I'll get back to that next week as I'm back to work, and I'll get back into my work routine. So look forward to that in the next portfolio update next week. But other than that, as usual, if you want to follow me off YouTube, there's a bunch of different ways you can do that. You can do it on Blossom here. You can see all my trades and my posts. You can also follow my Snowball portfolio, all the great stats I was showing you. You can kind of see that for yourself and poke around and really see all my real numbers. Nothing's hidden. Just love being transparent about everything. And there's also my Patreon here. That yeah, this has been good to have like a backup of like all my videos across both channels. I upload stuff day and date, and you have all my full backlog. Just today, I posted the early version of my tracker sheet for patrons to take a look and give feedback. So like I said, this is kind of coming soon for people. Right now, this is kind of just locked behind the membership, which is mostly just supporting the channel. And that's that little extra perk there that you get early access to this. But my plan for my sheet is to put it out for free eventually for everyone else. So just kind of gathering feedback for it and just giving early access to people there. And yeah, and then of course there's the Discord. So yeah, pushing over 200 people strong, and yeah, great way to kind of check my trades. Yeah, just good conversation between other people that are living in their accounts too. And yeah, it's a great little community that I've been really happy that I've been kind of fostering, and other YouTubers on there sharing their videos, and an open space for everybody to talk about their strategies, whether it's similar to mine or not. It's just good for everyone to be exposed to different ones, right? There's no one end all be all way of doing things. So you can pick and choose what really works for you in your situation. So yeah, again, Happy New Year. If you got some value of this and you're just excited to kind of keep following along my portfolio into 2026, please give me a like and subscribe on this channel, Fully Invested Fi Labs, or the main one, Fully Invested Fi. Yeah, at the end of this month, I'll be back to posting on the main channel with just my taxable brokerage portfolio, and then this companion channel here will just be posting about retirement stuff and more like early retirement mindset, things like that. So a bit different than the main channel. I'm going to keep those two pretty separate. So yeah, looking forward to bifurcating all those two, and yeah, just having that very separate. Yeah, this is just the temporary messy middle right now. All right, take it easy and have a good day. Peace.